Hi, my name is George Dagnino. I'm the editor of the Peter Dac Portfolio Strategy and Management. This chart shows the price patterns of commodities, of six commodities. The commodity yields, which is the price of the price of money, the commodity money. Copper, the price of an important mineral. Um, Lumber, the price of wood, and oil, of course, which depends on OPEC and everything else. Nat gas, that depends on, among other things, regulations and so on. And soybeans, their price depends, they say, weather, rain, and so on. Anyway, what I wanted to show you is something that when I started studying the business cycle many years ago, I read many books from the National Bureau of Economic Research. And the message from all these smart people was sound, very, very clear, which I would like to show what they were right. After so many decades, what they said then, they still applies now. And the message is that all commodities are moving the same direction. I have published in previous videos and articles the business cycle indicator, and this indicator shows that the business cycle peaked around here in 2018. The economy slowed down and then picked up again in 2020 after the lockdown. But what you see is that the commodity yields declined, then started rising since then. You see the commodity copper came down, then started rising since then. You have the commodity lumber steadied down, and then the boom in the housing sector, and then this weakness in the lumber. Oil, cartel, and so on, but still the eventually went down, declined during this period of slowdown, and then at the bottom of the business cycle picked up again. Natural gas, same pattern. Soybeans, totally unrelated from lumber, and copper, seemingly unrelated, start going up. So what is happening now? This is the bottom line. Well, what is happening now, the Fed started tightening here, roughly September, October. If you look at my previous videos about money supply and slowdown and the decline in the growth of reserves, it shows the economy started slowing down. The Fed started tightening then, and business cycle indicators started declining, showing a weakening of the economy. And as you can see, some commodities like copper, like lumber, started, natural gas responded promptly to this slowdown. Yields are still not responding, but if you look at crude oil now, it's beginning to sputter, and there is some sharp decline. Natural gas has declined sharply. So with the continued decline in the business cycles, the odds are that we are witnessing an important peak in commodities. One of the things to consider is that what the masters of the business cycle of many decades ago wrote extensively said, beware of the commodities that goes up when all the other commodities go down, because chances are eventually all commodities will move in the same directions as they did in this period and in this period. So if this is a peak in commodities, as I think it is, and as you can see from copper and other commodities, the odds are that all the other commodities that are still seemingly going up, like yields and crude oil, I think this eventually they will also decline following the weakness of the business cycle. By the way, from an economic viewpoint, this is also justified in terms of, again, the US business cycle declining, and also the business cycles of the major developed countries is also declining quite sharply. Therefore, as the economies of the world weaken, you can expect this, I think, is going to be an important peak. Why is it important from an investment viewpoint? Because if this is a peak in yields, then what is coming will offer a great profit opportunity by investing in bonds. Of course, if these commodities keep on going down, as I think probably they will. Well, I hope you enjoyed these comments. Please do keep in touch. Thank you. See you soon. So long.